Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you had a very nice weekend as well. And in today's action, the S&P and the QQQs largely remaining flat. Now, we did have some performance across many different sectors of the market, and within certain sectors of the market, namely QQQ, today was a pretty good day for some of the software names out there that have been beaten down for the last 3-4 weeks in a row, starting to show a little bit of a sign of life. And we did have some individual names, as you can see on this list right here, performing really well today, but for the most part, some of the biggest names in the market being a bit left behind as a result of that very low volume. Now, this goes hand in hand with our seasonal period right now, in which we can see a lot of choppiness in the tail end of the month of August and early September, notoriously a low volume environment, especially as Wall Street comes back from their holidays, the kids go to school, people just aren't that focused on their portfolios at this time of the year, but that all does come back into the end stages of the month of September and October. That being said though, guys, we did have one big piece of news that we were tracking today, and it was these developments right here. Zelensky and European leaders press for security guarantees in the legendary meeting with President Donald Trump. I don't remember the last time that we saw so many leaders of the G7 together in one common place, especially in the White House, but there was a lot of discussions today building upon Trump's meeting with Putin last Friday in terms of moving towards an actual peace deal. Now, so far, nothing concrete, but the talks are going well so far, as was reported by the media all throughout the day. So we will, of course, stay up to date on these new developments as they come out throughout the week. But as of right now, nothing truly market moving as of just yet. In terms of the rest of the stuff we have to look out for this week, well, we don't have that much macro data. Tomorrow, we don't really get too much. Wednesday as well, we don't really get too much, only the FOMC minutes, but that's just a recap of the FOMC meeting a few short weeks ago. The biggest day arguably is going to be on Thursday, where we get more manufacturing and service PMI numbers in terms of inflation. And then, of course, Thursday and Friday will be the infamous Jackson Hole Symposium, where we get to hear from Jerome Powell and his thoughts on the direction of the economy, the direction of the labor market, interest rates, inflation, and all of that good stuff. So Thursday and Friday, probably going to be your two most volatile days of the week so far. But today, not much action, especially on the indexes. You really had to zoom into the individual names to see any outsized performance. So in terms of today's video, guys, we're going to do a few key things together. Number one, I have one corporate earnings to bring to you guys this afternoon, and that is going to be Palo Alto Networks, which reported their earnings after the bell, and they're doing quite well. The stock's up about 5% right now. So we will cover their earnings. After we're done with their earnings, we will do a quick recap of the market rotation, go through our technical analysis on most of your market sectors, see which ones are leading, which ones are lagging, and which sectors where we possibly find some trades within, right? Thereafter, we'll do the same thing on our big tech list down here, derive whether or not some of these companies are at good buy locations, either for some swing trades or for some long-term portfolios. And yes, at the end of the video, I will be going through the biggest gainers and losers of the day. We'll take a look at which of these companies did the best. Are they still good for some swing trades? Which companies did the worst? Same thing. Are they possibly good for some swing trades? At the very end of the video, I'll be taking you guys through a very brief recap of my portfolio and trades made today. Not too many trades today overall, guys, but still, I'll bring you guys through the portfolio overall. We had a pretty good day. A lot of our positions are just continuously riding into further and further territory of gains. But there were a few key trades that I figure should be noteworthy to mention, and that's going to be it for today's video. So without further ado, let's jump right into the action, shall we? So the S&P down about 0.02, the Q's down 0.04. Overall, the heat map, though, guys, was very mixed. You can see several sectors up, several sectors down, very low volume day, nothing too noteworthy. Some of the big tech names were kind of mixed. Microsoft and Apple, Google and Meta down. Meta down at one point today was down almost 3%. So they were the biggest loss leader in terms of all the big tech names. And then we had NVIDIA, Amazon, and Tesla kind of there to pick up a little bit of the slack. But the main thing, guys, that I noticed today was the constant rotation back into software plays. Take a look. A lot of these software plays got crushed over the last few weeks, guys. CRM now starting to have a little bit of momentum to the upside. Monday.com, which had their earnings last Monday, Well, maybe we're looking for a bit of a bounce. Other names like Adobe have been trying to put a bounce together as well in the last few days. ServiceNow, same concept. They got crushed, even if they had great earnings, starting to come back a little bit. So some of the software names starting to get a little bit of rotation in the whole technology segment. Financials, not doing too bad today. Healthcare started off the morning very strong, but sadly, unwound and gave it all back towards the end of the day. Consumer defensives, well, Walmart and Costco did pretty good, but that sector was mixed too. And the bottom half of the market, the interest rate sensitive component, not doing so well overall, guys. Today was another day where we saw 10-year and 20-year yields moving higher. And as a result, there was a bit of an unwind in some of the interest rate sensitive names, as that whole segment of the market is probably going to wait for more clarity come maybe this Thursday and Friday with Jerome Powell. And if we don't get it then, maybe even into September for the infamous Fed meeting. So that being said, guys, before we get into more technicals, we are going to go over one company earnings. And of course, it's going to be Palo Alto Networks. So Palo Alto Networks right now, up about 5% in the after hours. They had really good earnings, and they were under a lot of pressure because they spent a whole bunch of money for CyberArk, a big acquisition right there. The stock tumbled 20% from its highs. And now we are going to see whether or not that acquisition was worth it for them and whether or not they put up good numbers. Well, they actually did. So earnings beat on EPS by 7.32% and a revenue 1.42% beat for the current quarter. Very solid. Taking a look at some of the easy numbers for Palo Alto Networks. And you guys will see that the revenue was up 16% year over year. Very strong. Annual recurring revenue up 32% year over year, $5.58 billion. This company makes a ton of money from their subscription model. Remaining performance obligations up 24% year over year, $15.8 billion. That's about a year and a half's worth of revenue in the pipeline for Palo Alto. Very strong. And EBITDA as well. So this is a company that moved from being a non-profitable company just a few short weeks ago. As they're scaling revenue, they're able to improve bottom line margins and even operating margins. You can see the operating margins right now. A little bit of an uptick now, close to 30%, which is very strong. The company also gave extremely strong guidance. We're going to get into that in just a few short moments. Here is what the CEO had to say about their quarter. Our strong execution in Q4 reflects a fundamental market shift in which customers understand that a fragmented defense is no defense at all against modern threats. I'll remind you why he's saying this, right? Talking about a fragmented defense. Palo Alto Networks used to be a company that used to sell some of its services individually. It had about 15 different things that it could sell to clients. And a few quarters ago, they embarked on what they called a platformization process, meaning they really put all of the individual components together into two very clear packages and started selling those to customers. So that way customers weren't able to choose, well, I want this, but I don't want this, individually picking between 10, 15 different things that they would have wanted. No, now Palo Alto sells a comprehensive solution. It has two main packages that it sells to clients, and they've been doing really well in terms of those sales. So that's what he means when he's talking about the fragmented defense now to a more fully encompassing software suite. They are partnering with us because our platforms are designed to work in concert, creating powerful operational synergies that deliver superior, near real-time outcomes and the efficiency that our customers need. We exited fiscal year 2025 with an acceleration in RPO, remaining performance obligations, and surpassed the $10 billion revenue run rate milestone, positioning ourselves well for sustained growth ahead. Very nice. Our strong top-line results were complemented by continued operating efficiency and strong free cash flow generation, making us a Rule of 50 company for the fifth consecutive year. So this essentially the Rule of 40, Rule of 50 is, of course, talking about the operating margins and the revenues both together. So that being said, guys, in terms of the direction of the company, they've been doing really well. Take a look at their revenue expansion here. They make revenue in a few key different ways. Number one is, of course, the bulk sale of their products. Then they have the subscription revenue associated with those products. So a first-time fee to acquire the product, then some subscription revenues to keep those products up to date. And then thereafter, we have some support revenue, of course, for whenever these companies need help with a few of their products. They have a lot of different sources of income, all three of which have been doing really, really well in the past few years. You can see the clear acceleration from a year-to-year basis for Palo Alto Networks. So revenue, top-line revenue growth is definitely not a problem for them. Taking a look at some of the earnings slides for you guys, total platformization. So as I was telling you guys, they're now bundling everything together in two main categories, but there's going to be a new one soon, and that's why they acquired CyberArk. So take a look here. Right now, they have two different main features or two main different selling products: network security suite of products and security operations. But they are adding one more with the addition of CyberArk. This is going to be another very strong addition for them. We'll get into that in just a few short moments, but I just want to explain you how this company is broken down. So total platformizations, very strong, 1,400 in Q4, which is very strong, on track for fiscal year 30 target of 2,500 to 3,500 platformizations, very strong, and 120% boost in NRR, which is extremely strong, low single-digit churn, which means the retention ratio for this company is extremely high, and they are targeting, once again, 15 billion in ARR by fiscal year 2030. So they're just telling you this is how much revenue that the company plans to make by 2030. It helps us if we're looking to model where the stock's price could be by 2030. And we're going to get into that, of course, in just a few minutes here on the channel. So they have big deals in the pipeline, of course. One global consulting firm, $111 million deal. A global financial services firm, they don't name them, but $61 million deal right there. And a large U.S. insurance provider, $33 million. So, of course, this company has customers all across the board in many different aspects of the market right now, right? So network security ARR, that was up 35% year over year, very strong. Moving on further here, guys, in terms of their network security operations, which is very strong. They also had pretty good numbers, talking about 1.7 billion here in ARR. That was up 25% per year. So very strong, guys, right? Whether it's network security or whether it's their security operations division, both of which growing double digits, well above 20%, which is exactly what you want to see. We're not going to go through every single slide individually, but just to show you that they're really doing good in both main product suites that they offer right now. Now, talking about the CyberArk acquisition, they spent a lot of money for this company. Is it actually worth it for them? Well, they're bringing on 10,000 new customers, which is very strong, including 55% of those customers being Fortune 500 members, very strong. Now, as well, what we're going to take a look at is the fact that they're attacking a brand new thing with CyberArk. So CyberArk is identity security, something that Palo Alto Networks formerly did not do. This is why they purchased the company. This is going to be layer number 3 in terms of their product suite. So it should be a very accretive addition to the company right there. In terms of the revenue graph, you guys can see that, right? Revenue, we already checked on the previous graph, but looking very solid year over year. Remaining performance obligations still also expanding at a very strong rate. And then next generation security ARR. I mean, the revenue growth rates are slowing, but still very strong, right? So in terms of the guidance of the company as well, the guidance was very good. I'll show you some of the guidance metrics right here. So they did beat pretty much all across the board, but one main thing that you really need to focus on here is the guidance. Will they be able to sustain these revenue run rates into the future? Well, they give us the full fiscal year ahead guidance. Next gen security ARR, still high 20% growth rate. But as I showed you guys, it's the law of large numbers that's catching up to them, right? They cannot grow their next-gen security ARR that fast anymore. It used to be 43% just about a year ago, and now it's high 20s, but it's still very strong. And when you're talking about something coming down, you don't want it to come down too fast. 26, 27%. And just as an absolute number is still very strong. Remaining performance obligations, you can see here that it is slowing down into next year, but next year still 17 to 18%, which is very strong. Total revenue growth is slowing down from this year's 15, 16% to 14%, but still very good, mid-teens. And in terms of operating margin, this is a highlight for the company, right? As it currently scales, Palo Alto had a problem prior, and the problem that it was having was the margins were just not consistent. Take a look here over my left-hand or right-hand shoulder. You'll see that the net margins for the company into 2023 were just not all that strong, yeah? But over the past 6 quarters, they've been doing a very good job of maintaining those high margins as they scale. So they are coming into more operational efficiencies, and overall, just not that bad of a result for the company. If you take a look at their gross margins, they've always been very high. It's a software company at the end of the day, right? But the trick is, can they bring more of that into operating margins and more of that into net margins? And the answer so far has been yes. So I really like to see this guidance in terms of operating margins, because that is a lot of what Wall Street looks at as well. In terms of their net margins for this quarter, guys, I mean, they were a bit shy of what we got last quarter. Last quarter was about 11%, but this quarter was roughly about 10% net margins, which is very good. So I will expect them to continue that trend into the future. So Palo Alto Networks, very strong earnings release. Number one, revenue growth rates across their entire platforms are very good. Both lines of business essentially for them generating double-digit returns. Why, as a result, is revenue only up 14-15% per year? Well, it's as I showed you on this graph, right? Not everything is new signups and subscription services, right? There's a lot of support revenue as well and the initial product signups, so please keep that in mind. But overall, I'm very happy to see these earnings from Palo Alto Networks. It shows that as they scale, they can remain operationally efficient, and they are generating some pretty decent free cash flow at this stage in their, in their stock's history, right? The free cash flow yield right now, they just reported about $3.5 billion of free cash flow for this year that just ended. I know it's not the calendar year, but for them, it's their fiscal year. So free cash flow yield of 2.9%, which is pretty decent, guys, overall. However, they did spend a whole bunch of money for CyberArk. This is true. You'll see here that they're generating a lot of free cash flow. They don't have too much debt, but we will start recognizing a bit of debt. It was a cash debt and a little bit of dilution for shareholders in terms of the CyberArk deal, but I do think that's going to be an accretive deal for the business. Now, I know they spent an absolute ton of money on it, but I think it's well worth it for the company in the long run. It allows them to broaden out their product offerings, and we've been seeing various people acquire cybersecurity companies, namely Google. You guys remember when Google acquired a cybersecurity company just a few quarters ago for like $30 billion? Well, Palo Alto Networks is doing the same. And I do think that more consolidation just like this will come to the cybersecurity industry as a whole. Right now, there's so many different players and the sector is pretty fragmented, but I do believe there will be some consolidation amongst the top players and they will start to kind of buy out certain members of their competition over time. Now, Palo Alto Networks, is this company a buy right here at 185 after their earnings? Let's have a look, shall we? So the price to earnings on a forward basis is 56.57. They're growing revenue and EPS on average for the next couple of years at very strong numbers, right? But that being said, still, it's a very high price to pay for this company. The PEG ratio is sitting at a 3.53. That is very high, guys. Price to sales even is also very high at 12.78. And as I said, the free cash flow yield at 2.9%. Now, we do have some guidance here for annual recurring revenue numbers come 2030. Now, annual recurring revenue is not their only source of revenue. So to derive their overall source of revenue, you can add about 20 to 25% to that $15 billion number. But still, even if we were to project not even to 2030, only all the way until 2028, you can clearly see their sales estimates here for 2028 is about 13 billion, right? Right now, the company is currently standing at 117 billion. So my question to you guys is, if you want to buy this one, how much do you actually want to pay? What is fair? Because this is one sector of the market that trades extremely expensively. So that being said, in the event that we give them a 10 to 12 price to sales for 2028, which is literally where they trade right now, well, you're not having that good of a compound annual growth rate, right? If we say that their future sales pipeline in 2028 is 13 billion and we give them a 10 price to sales, well, you guys know the drill, right? 13 times 10, it's 130. We're already at $117 billion market cap. So this divided by the current market cap is only 11% upside from here until 2028. That's if we give them a 10 price to sales, which is standard for a lot of tech companies. If you want to push it and go for multiple expansion, which is not what I like doing, I like to be able to derive a base and bull case based off the company's own fundamentals. If I have to resort to multiple expansion, it kind of removes a little bit of my, penchant to buy the company essentially. But let's just say the street gives them for the next 3 years a 15 price to sales, which is extremely rich even for any tech company out there. So 15 times their 13 in 2028, that would be a market cap of 195 billion, almost 200, and that would be potential upside of roughly 66% into the next 3 years worth of time. So once again, is it a buy? Well, it all depends. What's the multiple that you want to put on this thing, right? If you agree to pay a 15 times forward price to sales multiple by 2028, then there's 66% upside potentially in the company. If you don't feel that the company deserves the current growth rates that it has, and it's debatable, right? They're growing revenue and EPS at a very nice clip, but it just doesn't give me much margin of safety. I like Palo Alto Networks as a company overall, but buying it here may just not give the best compound annual growth rate. I still think they will grow as a company, guys, but you're going to be growing while still having a very expensive valuation all the way throughout. So if I wanted to buy Palo Alto Networks, essentially what I'm saying is it would be a smaller position for me, something like 2-3% of the portfolio, hold it for the long term for the next 3, 4, 5 years, and go for the overall market cap expansion over the next 3 to 5 years, agreeing to pay somewhat of a rich valuation, but we know we're not really getting the best deal on it. So those are my thoughts at 185 on Palo Alto Networks. Could it be a little bit of an opportunity for a swing trade, just recovery back to the highs with a possible stop loss below our most recent lows of 173? Sure, right? That's about a $12 stop loss, and the upside is all the way up at 210. So call it a 2-to-1 trade. $25 of upside, $12 of downside. Not too bad for a longer duration swing trade, but you guys know me, right? In terms of cybersecurity, I have a few favorites: Cloudflare, Palo Alto, CrowdStrike. And those are pretty much my favorites for now. However, you may just want to consider, if you don't know which one to pick and you just want to participate in the overall sector, you might just want to consider an ETF, such as this one right here, CIBR. If you're struggling to pick between them, picking between the winners and losers of the sector, you may just want to let an actively managed ETF do that for you. And that way you have exposure to the entire sector without picking maybe the wrong company, the one that doesn't have the most gains out of all of them. I like to go with an ETF. And as a matter of fact, I do have a cybersecurity ETF as my cybersecurity holdings in my long-term portfolios. That's everything I had for you guys for Palo Alto Networks. Hopefully you guys enjoyed that. Now let's jump into some charts. So moving into the SPY, this is going to be an easy one, guys, because nothing really has changed, right? We are still in some form of awkward sideways consolidation. The bulls are still in control, though. Beautiful daily uptrend, pulling back a little bit, but anything above 620 is just looking for a daily higher low for possible further trend continuation, right? If you want to get me interested in possible downside, we're going to have to engulf a majority of this move, set a downtrend, and then go for weekly consolidation. That is when things are going to get very interesting for the markets. But as of right now, the bulls control all major time frames, and until that changes, until they at least change the daily, they will remain in full control. The QQQs, largely the same analysis here, guys. There is nothing to see, right? Daily uptrend is very nice right now. We're pulling back for the last 4 days into the 12 EMA, and the bulls still control everything. If you want to get me interested, right, we're going to have to do a bit more of an engulfing move, set a daily downtrend, and then we can talk about possibly some weekly retracement targets, such as the weekly higher low here at about 552, which lines up with the 12 EMA as well. That being said, who's in control right now, guys? The bulls. So it's all about finding some pockets of the market that have been a little bit left behind recently. And in terms of tech, well, that has to be software. So I will be focusing some of my attention to the software industry in the next upcoming few weeks. And a lot of that has to do with some of the cybersecurity players that we just saw, right? CrowdStrike, not a bad bet down here if we come into the lower 400s. Palo Alto Networks possibly able to recover a little bit as we were just seeing after their earnings. Even companies like Fortinet, which have been down, but other ones just as well, right? Some CRM possibly, maybe some Adobe, stuff like that. Stuff that's been a little bit left behind where we can clearly establish some stop loss areas below recent lows and possibly take some swing trades based off of those levels towards more recent highs. Those are some of the ideas that I'm having in the next few weeks of time. Moving on to XLF right now. Well, XLF just really flat on the day. Daily uptrend is very nice right now. Looking for a higher low. Anything above 51.20 higher low for possible further trend continuation. No new breaks of the highs. We're really just kind of consolidating here above the area of support, which is 52, down about $50. That was prior resistance for the all-time highs. The bulls are just doing a bit of sideways consolidation action. Tough to know which way this is going to break. But if you take the monthly bias, which indeed is up, right? After a little bit of consolidation, we are looking for a possible upswing, especially into a possible rate cut meeting in September. Financials, you guys know the drill. My favorite companies remain Visa, bouncing out of the support range, 340 to 327, decent zone for some long-term portfolio accumulation right here. And even a company like Berkshire Hathaway, if you guys wanted to try and play the recovery of property and casualty insurance, right? We know that these have been somewhat unfavorable right now. Berkshire down, almost every single week in the last like 3-4 months. It will not last forever. Names like PGR are starting to try and curl around out of support. Even names like Brown, right? Brown just flushed the level, but just look at all the property and casualty insurance names. Take a look at Allstate. Allstate's just been doing nothing for a better part of the last, 6 months? And even something like a Chubb, right? All right, let me just look at Chubb real quick for you guys. CB, this one too, doing absolutely nothing. So we can find some pockets of financials that have been a little bit unloved recently. And those are just a few ideas that I figured I should bring to your guys' attention. On to healthcare right now. Healthcare actually had a great start to the morning, but pulled back a little bit. Still not able to get a break above the infamous 137 level of resistance. Beautiful candle close last week, but if they cannot do it in terms of the breakout here, we're just still going to be trapped in this very wide range of consolidation between 136.5 down to about 130. So I'm still a big fan of playing some of the healthcare names or just playing the sector overall. That being said, we are still into a very large support range right here from 2021 to 2023, and we are still in around the 50 monthly EMA, which has been notoriously a good buying opportunity if you have a long-term time horizon. So I have some XLV leap call options for January 2027, and I'll just be taking this one slowly but surely, waiting for the bulls to finally get it together and start piecing together a little bit of a comeback. Moving on to SMH Semiconductors. Semiconductors finding a low here, right, in the last 2 days, grinding this 12 EMA. We know they lost it before, but now recapturing the uptrend. Higher lows are now probably in motion, so we're still hunting for them. Remains to be seen if we'll be able to expand or not. Not looking too bad on the SMH though, and even if we unwind here, guys, daily downtrend, just want you guys to understand, right? We got a lot of space. Anything above 279, looking for a new weekly higher low. And even on the SOXX, if you guys like to look at this one instead, same concept, right? The bulls are still in full control. The new weekly higher lows are set down here at about 232. We would just be looking for more higher lows, maybe some consolidation above at the worst case scenario, right? Sideways consolidation above the whole support area, kind of like XLF is doing right now. They broke an area and now it's just been kind of awkwardly consolidating above it. SOXX, not too bad, but still the price action still somewhat a little bit unclear in the short term. I mean, the bulls are in control right now, but there's one big catalyst next week that could give us a further breakout or a big pullback. Do you guys know what it is? Of course, it's going to be NVIDIA earnings. NVIDIA earnings next week. So as a result, maybe the sector doesn't move too much until that time, because that's a very big catalyst for them, right? Into the Russell right now. The Russell's still struggling a little bit into resistance, 231 down to 225. Daily uptrend is still in favor of the bulls, of course, and looking for a bit of a higher low. If we do come back, we might come down into all of those guys, the daily EMAs and all of these previous resistance areas, which should now be support. Talking about 225. So we'll see. Can they get it done and crack through the highs, or will growth once again be somewhat muted until the time where we get more clarity on the rate cut path? Everybody is talking about whether there's going to be a rate cut in September, and if there is, how much. Not too many people are talking about the path. Don't forget, in September, we get a few things. Yes, we get the interest rate decision itself, but we get the summary of economic projections. We get to see what does the Fed have penciled in for the next 6, 12, and 18 months in terms of the path of rate cuts, which arguably is more important than the September interest rate decision itself. If we do pull back here, looking for a higher low, anything above 212.60, higher low on the weekly, maybe for a second attempt at breaking through that resistance range. That's everything I had for you guys for the overall market breakdown. In terms of the VIX, the VIX still doing absolutely nothing, so there's really nothing to see on this chart. We will see. The only volatility catalyst that we have in terms of this week will be on the Thursday and Friday session, so pay attention to that. In terms of the yields, also nothing going on with the yields, guys. Just a big push and pull. Non-farm payrolls, dropped them. Rate cuts were very clear. Now we've had some data like the CPI and the PPI, which once again has brought rates back high. But as I keep saying, right? No break of 4.2 on the 10, no weekly downtrend, and no monthly momentum to the downside either. And the 20-year yields, same concept. No break down below 4.7, no weekly downtrend, and also no confirmed monthly push as well to the downside. I do believe these yields will stay largely muted until that September meeting. And as a result, the bonds are still doing a whole lot of absolutely nothing. So this is still a good area to accumulate some positions, as eventually the bonds and the longer term yields will move in the same direction as short term yields, but we need the path of the cuts first, right? So This is just still an accumulation trade for me. On to gold right now. Gold was largely flat on the day, doing absolutely nothing. Gold is really stuck here, guys. It's just stuck, right? Overhead resistance, 3,400 down to 3,365. And below support, 3,300 down to 3,260. So I'm probably not going to be playing gold in the confines of this range. I will need a break one way or the other. If you get the break to the downside, well, of course, that is your first big weekly downtrend and loss of the 12 EMA, something that we've held all the way since the month of December. That should be very notable to you and would possibly be the start of extended monthly consolidation down to 3,000. There, you would have a lot of momentum and you can make a decent amount of profits in terms of that direction. To the upside, we need to see a break and close above 3,400. Give me the good old breakout, retest, and run. You can see we've broken out of it a few times, but every single time the bulls were not able to do it. As a result, we still do have a bullish leaning bias because we're kind of tightening up at the highs, not losing anything, but you need to give me the confirmed breakout. I will not just sit in this range and guess which way it's going to break. Moving on to Bitcoin right now. Bitcoin was down on the day and down a bit throughout the weekend as well. That being said, we have just lost our daily higher lows, unfortunately. They were at 116, and we also lost the level. This was a nice area of resistance. We broke through it, tried to use it as support, but the bears were a bit too strong. Now, sadly, daily downtrend. So daily downtrend just means more weekly consolidation. And on the weekly timeframes, guys, it's just been sideways action, a little bit like back here. So right now, we're still just looking for some further weekly consolidation. Pay attention, though, to the break of 112. Get the break to the 112 to the downside, maybe just looking for a monthly higher low as well. And the likely area of backtest here would be, of course, 108 down to about 100, looking for a monthly higher low for further trend continuation. The way that I'm playing this, guys, very simple. I'm just looking to sell puts under the market, and I'm using BITX as my product to do it. If you guys want to play MSTR or whatever you guys want to play, you are free to do that. I'm just using BITX as my proxy. Onto Ethereum right now. Ethereum also setting up a bit of a new daily downtrend right here. Had a great push, but sadly, the bulls got a little bit tired perhaps. So we will see if they can carry this daily downtrend momentum into a bit further weekly consolidation. And this chart is very clear, guys, right? It's a beautiful weekly uptrend and weekly breakout of a big area, which was 4,000 out of 3,700. In the event we find more weakness here, that's probably where we're heading back for the back test. I'll be looking here for an Ethereum back test to possibly reposition for some swing trade longs. And that's pretty much everything for your overall market rundown. Now let's get into some big tech names. All right, so first taking a look at Apple real quick. Apple down about 0.3%. Not too much price action here on Apple, guys. Just a little bit of consolidation. You can see that we did break above our area of resistance. Well, most of it so far, still not breaching above the infamous 232, which is the stopping point for the markets right there. And that being said, if we do consolidate, the bulls have tons of space, anything above 201.53, looking for a new daily higher low to set a brand new daily uptrend. We will see if they can get it done. On the weekly timeframes as well, there is so much space on this weekly, guys. So as a result, any pullbacks on Apple, I'll probably be looking for a reload for some short puts down here in the lower 220 region, and also a reload for some swing trade longs on Apple if they want to two-step this process. That is, unless they completely just break out of it right away, which is always a possibility. But I'm just saying, if we get further pullback, I will be playing Apple down here. Moving on to AMD right now, down about 0.77. The bulls still in control of this chart right here, grinding away at this 12 EMA. Keep a look at this level right here, 169. If you break 169, loss of the daily uptrend, possibly the bears are going to be able to use this resistance as a backtest location for the slide. If that ever does happen, just understand what's going on here, right? We'll just be losing the resistance range for a bit of a pullback. Your weekly higher lows are right now at 157, which is the low of earnings. A lot of space for the bulls. If we do pull back on AMD, I'll be looking for some short put opportunities down here under 160 and possibly even a reload area for some swing trade longs in the event we do come down there. I still think AMD is a fantastic bet just because they're fairly priced in terms of their growth expansion metrics for the next few years. On to Amazon right now. Amazon up about 0.2%. Daily uptrend is very nice on Amazon right now, and we did clear the infamous resistance range, which was 227 down to 219. Broke below it for earnings. The bulls grabbed it all back right now, and not looking too bad at all. So Amazon bulls, anything above 218, 219, looking for a higher low. Tons of EMAs as support. A very big level of support as well. Horizontal support from back here. It was a challenging area to break through, and now we have reclaimed it again. The longer time frames confirm that the bulls are still in full control of this trade right now, looking very strong. Your weekly higher lows are set all the way down here. The low after earnings at about 212. We're just looking for a bit more expansion. And even if we get stuck a little bit right here, guys, you guys know how I'm playing Amazon. If you give me a nice little back test down here, possibly looking to sell some put options in like the 2 teens, 215, etc., etc. Amazon's still one of my favorite names for some long-term portfolios. I think the growth for them in the next 2-3 years is going to be quite good, especially the expansion of their margins. Moving into Google right now, Google down about 0.3%, not able to create some space here above the resistance and go for a new all-time high. So we are still struggling with that area, but not too much is noteworthy with our price action right here. 207 down to 201. The bulls with a little bit of space right now. Anything above 199, looking for just a daily higher low, maybe for an extra attempt. But in the event that we reject this one hard, well, then the bears can use this as a backtest location, go for the daily downtrend consolidation, and as a result, go for a new weekly higher low. Because who controls this weekly chart? You guys tell me. Obviously the bulls, right? Looking for a higher low. And what better area to do it in than right back here to the lower 190s? Your 12 EMA is there. It is also a very nice area of horizontal support. This was support for the bulls. This was resistance. So that is the next target zone in the event that Google drops a little bit more. But as of right now, the bulls do control the daily. They control the weekly. It's just we're struggling a little bit with resistance, and in the 190 range, Google is still representing some very decent value for some long-term portfolios, in my opinion, as well. On to Meta. Meta down 2.27%, almost down 3% on the day overall. Now, that being said here, guys, Meta struggling a little bit, coming right into our lows, 758. This was a very nice daily uptrend started after earnings. If you flush, you lose the daily uptrend, you open up the door for the daily downtrend, and you just open up the door for something very clear on the weekly time frame. You open up the door for just casual weekly consolidation. Meta's had a very nice leg after earnings. If we consolidate a little bit, no problem at all. The bulls are still in control. Previous highs could be the next area that we backtest, and that would be, of course, 740, 735. 12 EMA should be curling up there as well. In the event we do come back down there, I think it's not a bad area to add some positions for the long-term portfolio, but even for a bit of a swing trade long situation, I would not be opposed. Price action is very choppy right here. They're trying their best to defend the 12, but if they unwind, I will be there probably to buy the dip into these guys down there. And as I always said, as I already said, right, the 12 EMA could be a very casual location to maybe build a bit of a swing trade position. Moving on to Microsoft right now. Microsoft did something today, guys. What did they do? You guys have been listening to my videos now forever. It should jump out to your eyes right now. What happened today on Microsoft? I've been talking about it every single day for the last like 3 weeks. Well, we did something that we haven't done in 3 months. See this 12 EMA? We've now cracked the 12 EMA plus the daily downtrend. I was telling you guys, watch what happened to Netflix when they did that. I'm not saying it's going to play out exactly like that, but it has to be notable to you that we lost an area. Yes, we went for the earnings gap fill. This is true. And maybe the bulls are able to recover this instantly tomorrow. But if they're not, you should not be surprised. This is daily downtrend loss to the 12. And as a result, you may just be going into a bit more weekly consolidation. The next area, which would be a logical area, would be the 12 EMA, right around the 500 psychological mark. RSI curling over, MACD starting to curl over. If you see more consolidation on Microsoft, just do not be surprised. That being said, there is no swing trade for me right now on Microsoft, and also no long-term portfolio position. At around 517 bucks, the stock is still expensive. I mean, I did the valuation at 550. Just take 5% off of this, and it's still relatively expensive, trading at the higher end of its valuation range. So Microsoft's not a buy for me. It's not a sell. It's just a hold. On to Netflix. Netflix actually making some pretty good progress, right? And when you have this weekly consolidation that starts, as Microsoft is possibly doing right now, you see the daily downtrend, right? And eventually the bulls, well, they will show you where the bottom is. As you can see, nice engulfing move, recapture of our zone of resistance, which was 1211 down to 1185. And now you have a new daily uptrend. So you can say, okay, my weekly bottom is now confirmed. Now, where can we possibly go from here? Well, we'll see. We'll check on the size of the bounce. The whole time that the daily bulls have the daily uptrend, well, you know that the weekly bounce is still underway. As of right now, the bulls have made some decent progress on the weekly. This is now a 50% bounce, meaning if they were to stop dead in their tracks right here and reverse this, they have a 50% chance on the higher time frame of converting this into a new weekly uptrend. The likely area of backtest, once again, is exactly where we just broke out of right now. Not looking too bad for Netflix, but the bulls still have a little work to do. They lost the weekly uptrend. This is a flush of your higher low. We are effectively now trendless. It's not an uptrend. It's not a downtrend, right? The bears are trying to go for the downtrend. The bulls are trying to reverse into a new uptrend. We will see who wins this battle. Am I trading Netflix right now? No, not really. Am I buying any long-term shares either? No, not really. I mean, you can be if you have a long enough time horizon. I have a lot of Netflix shares. I don't really need any more. But if you were looking for a new position on Netflix, well, you should keep in mind management's guidance of a $1 trillion market cap by 2030. And right now, the company is currently trading at a $530 billion market cap. That will be a 2x over the next 5 years. Not that bad for a compound annual growth rate of return, but as of right now, Netflix is still currently trading at the top end of its current valuation. On to NVIDIA right now. NVIDIA up about 0.86%, defending the 12 EMA very, very well. So the daily higher lows right now are still set at 171. We are still looking for a new one. Until they set a new high, we can't say that this is the one. So that being said, they're trying to go for a daily higher low and trying to go for the daily uptrend momentum. However, we have earnings next week. It is very possible that NVIDIA does not do too much before next week, meaning very possible we don't just shoot up to 200, but also very possible that we don't just break down to about 160. Maybe it just stays a bit muted and a bit choppy over the next 1 week as we wait for those earnings. The bulls still control the daily, and they still obviously control the weekly time frame too. NVIDIA looking very strong on the weekly. Higher low is still at about 141. So any pullback after earnings or before, looking for a higher low. That being said, the next likely area is about the mid 160s, right? 162, 164 for that infamous 12 EMA on the weekly, because in terms of horizontal, you don't really have much, guys, until you come back to the 150 area. I'm not saying it's going to go there. I'm just saying that's where the next big area is. Moving on to Tesla right now. Tesla up about 1.39. They're trying to go for it here, guys. They're trying to go for it. Daily uptrend, trying to backtest the EMAs, trying maybe to make a little bit of a move into the resistance zone, which currently stands 340 to 360. It's a bit tough though, guys, because we're still looking for a daily higher low. This 1 day's worth of action does not guarantee that you have found a short-term local bottom, right? That being said, guys, we're still on the watch for it, still on the watch for it. If we back this a little bit more, it could be a bit more of an interesting entry right now, because the stop, if you're going for this move right here, just keep in mind, guys, the stop really has to be below this guy right here, 297. So you want to get as close as possible to that guy to give yourself the best possible expansion for the best possible chances at a nice weekly trend expansion as well. Right now, Tesla's price action is really just confined, right? Until we break out here or until we backtest here, the entries are a little bit tough. I wouldn't mind taking a bit of a swing trade entry around 320 around the EMAs. Right now, still a little bit too close to resistance for my humble liking. In the event we get a breakout of this range, then we can have an easy trade. The breakout, the retest trade, that's an easier one. Or break down below here, we can have another trade with a defined stop loss and go for the expansion back to the resistance range. In the middle right here, it's a little bit tricky. The price action is a little bit dicey. At least that's just the way I see it. Moving on to Palantir right now. Palantir down 1.77%. 4 days of downside in a row on Palantir. Are Palantir shareholders panicking yet? I mean, we haven't had 4 days of downside on Palantir in like 2 months. So maybe people just aren't used to it anymore. I don't see anything in terms of red flags right here. Talking about a daily uptrend, looking for a new higher low. Anything above 151, looking for that higher low. But we know, guys, we're very extended on everything, right? Whether it's on the daily time frame, whether it's on the weekly time frame being extended like that. The weekly bulls are still in control of this uptrend, of course, right? But there's a lot of space here. We've ran very hot away from the 12 EMA on the monthly time frame. I mean, if you're a Palantir shareholder, don't even look at the monthly time frame. Just don't even look, right? Just forget everything about valuation, forget everything about how overbought the conditions for this stock are. And I guess just consider the fact that you're in a cult and that everybody wants Palantir to be a $1 trillion valuation company tomorrow. But in all reality, it might take a bit longer than that. So we'll just monitor the short-term timeframes. If you see a loss of the daily uptrend, then you know weekly consolidation is underway. And of course, the next logical area for that would be back into the 12, which would be roughly around the 150, 160 zone. Don't say it's not possible. It can come very close, right? Palantir has come close a few times, even come back to it a few times after big rallies. Big rallies come back to the 12, right? Now, we also have sometimes big rallies. We don't get quite close to it, but we do get closer than where we stand right here. So I'll be watching out for it in the near-term future. On to SOFI right now. SOFI up 2% today. The bulls, man, they really want to go for this break of the resistance range. Talking about 2450 down about 2250 overall. Strong move by the bulls. Beautiful daily uptrend right now. Grinding this 12 EMA. The bulls didn't lose it even after the earnings volatility. We're just looking for a break and pop above. If we do get the break above and back test, could be a nice little area for some swing trade longs, of course. And it just remains to be seen, can they do it, right? We have big previous resistance up there. The next target, of course, is your psychological 25. The weekly bulls are still in full control of this beautiful uptrend right now, with the higher lows being set right around down here, $20 to $21. SOFI is looking really good. I mean, I have all the SOFI shares that I could possibly want, but in the event people were looking to start a new position, you got to have a 3 to 5 year time horizon to justify the current price. The valuation is not terrible at 24. It's about 10% higher than we were back here. So what? Like a 1.5 peg, not terrible. Almost a 9 price or an 8 price to sales, not so terrible. And you're going for market cap expansion. It's 28 billion. I would not be surprised if in 3 to 5 years, SOFI is a 40, 45, 50 billion company, $50 billion company type of thing. I know people want to see it 2x right away, but the next 2x on SOFI may not be as fast as the 2x that we just had, but the price action so far is still looking quite nice. On to Uber right now. Uber up about 1.49%, trying to crack through the resistance range. They got it today, but will they keep it? 93.5 down to 90 is that resistance range. Very, very choppy price action since the earnings, but looking good. Going for the breakout. We'll see. Can they give us the breakout? Retest so we can put a stop loss down here and go for a swing trade long up to 100? I don't know, but I'll be looking for it in the next few days. In the event we cannot get it done, well, we might just be looking at a bit more weekly consolidation here. Not too bad of a chart on Uber, all things considered, but if we do drop in a quick and fast-paced way, my favorite way of playing this one, if the price action is unclear to you, would just be selling some put options down here. Uber is still a very decent bet in the high to even mid-80s in terms of a longer-term share price appreciation play for like a longer duration hold. The monthly time frame is still looking quite good on Uber. And now lastly, TSM. TSM also still just doing a whole lot of nothing, right? Maybe this is what NVIDIA is going to look like until its earnings. I don't know, but TSM hasn't been really doing anything since the 17th of July after their own earnings, right? So that being said, very choppy price action on the daily here. Pay attention to the lows of Friday. If you break that, it is a new daily downtrend. Sadly, kind of like we had back here, the bulls will always have a chance to maybe get it back, of course, but just pay attention. You break that, it is a new daily downtrend. You will be losing this 12 EMA. And the last time that happened, we were saying, well, if it continues, you're going into weekly consolidation, and it did happen briefly. If it happens again, you will once again be going into further weekly consolidation. It's been sideways action on TSM, very difficult to derive short-term control as it's just not so clear right now, but it's not looking bad. This is kind of like a sideways bull flag accumulation zone after a really big move, just consolidation sideways. And even if we get a bit of a downwards bias, I will be looking to acquire a bit more TSM and sell some TSM short puts down here in the 220 region. Even up here at 240, it's not that bad of a bet for a longer term investor type of thing, like the next 3-5+ years. The valuation is still very manageable at a 1.5 peg and a mid to low forward price to earnings ratio. So that's everything I had for you guys for the normal market rundown. Now let's dive into some biggest gainers and losers of the day. Your guys' favorite section, apparently. Okay, so we're going to start off this section not so much with the biggest losers, but since this section is kind of like open floor, I'll just recap what I was saying about cybersecurity, right? So some of the names like CRM, we know that they've been down and down a lot. Clear daily downtrends right here, but a nice push. Same thing with Adobe, right? There is some tentative entries on these styles of trades, right? And we know Adobe as well is a big daily downtrend. Now, we do not have a confirmed new daily uptrend. As a result, the bears can still just steamroll us to the downside. So if we are looking to position somewhat aggressively and somewhat early in these ones without daily uptrends being confirmed, which gives us a nice entry and a tighter stop loss, well, obviously your stop loss has to now be below the lows. If we are targeting entries on this one, like let's say on Adobe, stops are below the lows. CRM, same concept. Stops are below the weekly lows, and you are targeting weekly highs. On CRM, that would be 271. On names like Adobe, that would be all the way up here at 421, right? You're just going for the next areas of weekly highs, weekly price action resistance ranges. So keep that in mind, but you do have to trade these ones with the stop loss because the bears are still in control. They control the weeklies, and you just don't want to get steamrolled without a stop loss, especially for trading with call options or things of that nature, right? Now, moving into the actual list right here, Circle down 5.15. Next area that we're going to be targeting here is 122 down to about 105. If we come down hard, there's a good opportunity to be selling some put options down here with a lot of distance on these names, essentially. A lot of the post-IPO names have some very good volatility. Look at Circle. If I go just like, just in terms of this week, where can I find 0.5%? Well, right now it's down to like 126 areas for 0.5% per week. There's some really good distance on these plays, right? 126 from the current price. When you see a big red day like this, 126 is another 10, 11% and coming down into support. If you're asking me where I'm going to buy any more long-term shares, you guys might remember after earnings, I bought some shares on Circle, and the next area that I will buy some shares on Circle is here. But it's tough for me to tell you, yeah, it's ready for call options. It's really not, right? It is a daily downtrend, and the weekly bears have full control of this time frame too. So until we see a confirmed new daily uptrend, we cannot say that these are the weekly lows. So we just have to go with a bit of distance if we're looking to sell some put options on some of these names. The same thing can be said about Figma, right? Cracking down below 77.78. Now we do not have any price action below that at all. So keep that in mind. If we're looking to play Figma, we should play it the same way. Short puts with a lot of distance, or just target the current market cap that you want to buy the company at. Keeping in mind, Adobe tried to acquire this company for about $25 billion a few short years ago. They're currently trading for $37 billion. If you ask me where I want to buy Figma, probably in the low 60s, I would start getting interested. And the only way that we can do that is by selling some put options down there on big red days. Now, the volatility has subsided. You can see this volatility curve. It's not as good as it was a few short weeks ago, that I will admit, but just pay special attention, be patient with it, and you might be able to find some mid-60s strikes if Figma has a few more red days. But once again, it's very tough for me to say, yeah, this is the bottom, when it's really not, right? The daily bears are in full control of this one. You need the bulls to tell you when that is going to stop. So rather than predict, guys, right, just react to price action. You're going to save yourself a lot of losses. Rocket Mortgage right here, same concept, going for the daily higher low. We will see. There's going to be some commentary by Jerome Powell this week, and that's going to impact yields, and as a result, interest rate sensitive plays. Rocket Mortgage is not too bad, trying to grind the 12 EMA. In the event we get a further unwind, because it's been a very nice period of price action here since the end part of July. Rocket Mortgage is up a lot. The cleanest time frame for me, guys, is the weekly. If I'm looking to play weekly pullbacks right here, I'll be patiently waiting for some short put opportunities down there. This is also my reload area for some swing trade longs, talking about 16 down about $15. I'm not saying it's going to get there. I don't need it to get there. You remember we took these leap calls. We closed some of the leap call options for 2x and 3x at the top. So I'm not going to get too greedy. I will wait for my pullback. If it happens, perfect, I'll jump back in. And if not, that's just everything she wrote. Moving on to MP Materials. MP down about 3.76. Very wild price action. MP is very far from the 12 EMA on the weekly. Look at the monthly chart, guys, right? It's so tough to buy something like that up here. You're basically just counting on further momentum. It is a bit of a daily downturn right now, so a bit of weekly consolidation is underway. The next area-ish of support is like 62, 61. But instead of chasing this one, as I've been telling you guys, I've been playing the other ones, USAR and quadruple U's. And the way that I'm playing those is either with very lottery-based call options, out-of-the-money calls for as long as you can possibly find on the chain, because you're looking for the government to maybe get involved with some other subsidies towards these other companies, or direct investments, as they did with MP Materials, with the Department of Defense investing $400 million in the company. Quadruple U's, looking nice for the breakout. USAR, unfortunately, now pulling back, but this one is a good idea, or just a trade idea, to sell some puts down there. If you wanted to acquire some stock and possibly see what happens this one over time, you can do it. Even call options, out of the money call options, $20 calls for as long as you can find on the chain, but you got to play these very small. It's a thematic play, and you don't know whether these companies are going to get their government subsidies or direct investments at all. But I would rather play those than chase MP Materials all the way up here. Those are other ones are just kind of like sympathy plays, right? CoreWeave continues to unwind, unfortunately, not quite breaching the Friday low, but I'll remind you, who's in control of this chart, guys? Well, it's been the daily bears, right? We had a nice daily uptrend. Sadly, they unwound everything. So now the bears are looking to capitalize on this weakness and go for the daily downtrend flush. Now, where could we flush to? Maybe perhaps mid 80s or something of that nature. We are still not daily oversold, but I'll remind you, rather than trying to predict the bottom of CoreWeave in the midst of a weekly downtrend, well, do the same thing that I told you guys on Circle and Figma. If you're looking to play this one and possibly make a little bit of money in the process, one of the easiest things that you can maybe do if you have the buying power is sell some short puts way below the market after a big red day. Today was not a big red day, but let's say tomorrow is a 5, 6, 7% day of follow through. You might find some juicy premiums down here into the $80 range. I bought some CoreWeave after earnings for some long-term shares around 120. I bought more last week around the $100 mark. Just small nibbles, guys. I'm building a position through probably $80. NVIDIA upped their investment into CoreWeave just last week, right? So looking very good. Their total percentage, I think allocation, I think they have like 8% of the company right now. Anyways, they bumped it up by another like $4 billion. But this one has just been out of favor. A lot of the post-IPO names have been out of favor. Talking about post-IPO names, look at Bullish. Everybody was looking forward to this one, and now everything is just unwound. So they're unwinding a lot of the IPO plays, etc., etc. Once again, very tough to find a local bottom on Bullish. There's just not enough price action to do it. And even on the options chain, sadly, they only have monthly options. They'll probably add weeklies shortly, maybe over the next 1 week of time. But until that point in time, guys, I'm not really playing these ones, right? They're just daily downtrends. The only way that I'm looking, you can't play these with call options until you have a confirmed daily uptrend. So no sense in guessing the bottom. I'll just let the bulls show me where that possibly might be. Talking about Symbiotic real quick. Symbiotic still reacting nicely towards its support range right now, 52 to 47. If it breaks, every time this one has some nice volatility, I like trying to sell some put options down here, low 40s. It doesn't look bad, guys. If you're trying to play this one for a bit of a swing trade long, I completely understand. The bulls are doing a really good job at creating a very nice, although wide, bull flag right here. Any positions that we're trying to take longs off of, though, you got to have a stop loss below here, guys, because if they lose this whole area, we're probably going to fall a little bit lower, and we're going to unwind a lot of this monthly bullish price action. So I don't want to sit in a trade anywhere below like what, 46.75. If they flush that, you're losing a few things. The daily uptrend is going to be lost, the weekly uptrend as well, the attempt at it at least is going to be unwound. And I just don't want to really sit in the trade at that point in time, but it's not looking bad for some follow through. The bulls are still in control, but we do have to trade this one with a bit of a stop loss. And lastly, maybe we can talk about HIMS. So HIMS has just been unwinding, very volatile since their earnings, of course. The easiest way for me to play this one is kind of like I'm playing CoreWeave rather than me guessing the bottom when we don't even have support areas, right? The next one is maybe after the candles from post NVO. I mean, you could find some former price action back there. So I guess there is a bit of a level coming up here into the 200-day EMA. My favorite way of playing this one, though, is once again, just selling puts with the greatest amount of distance that I can possibly find. And today wasn't a bad day. Early morning had a bit of volatility. I've been telling you guys on the top 5 options plays, look for $40 and below. You can see that this $40 strike today was trading around 15 cents. Not too bad. The 41 strike on the right-hand side here was trading for about 25 cents early morning with the volatility. And midpoint through the day, that contract was like 50% profitable. So this is how you kind of play volatility when selling puts in the market. I would not mind selling puts in the low 40, which is the area that I've been targeting so far. Now, in terms of other names, we got to talk about the names that are up today, of course. I mean, we could talk about Open Door, but you guys know the drill with this one. This is a lottery play. Only put into it what you're willing to lose. The bulls doing a great job at recapturing a beautiful daily uptrend. Short squeeze, a lot of momentum from the Wall Street Bets crew, of course, but a lot of them did get burned buying the absolute top and then unwinding all their positions. But it's not looking too bad for some follow through. So I also have a position on Open Door. I'm going to keep it for as long as humanly possible. But if you are playing this one, you got to play it small and just play the momentum overall. Keep that in mind. Applied Digital. Fantastic move, 16% by APLD. The bulls were consolidating right here, didn't give back too much, and then just went for it. Very tough to position in this area, guys. I'll be the first to admit it overall. The weekly uptrend is very nice continuation from earnings. And the next stop probably is going to be kind of right where we are, right? 17, 18, then all the way up here to about 22 area. Not a bad company, not playing this one for the long term myself, but for you guys that are in this trade, it's kind of late to position right now because the next, especially if you're swing trading, right? The next take profit is, I mean, it's all these guys right here, right? See these support levels right there? And this resistance from these candles, it's all the way up here, right? Like what, 19 to 22 range? So it's a bit tough. Like you can't really, unless you trade with this area below here as a stop loss, these guys right there, it's a bit tough to derive some good risk to reward profiles for this company. So a little bit too little too late on APLD for me. The area truly that we were commenting on a few weeks back in July was this area to build some positions. Now, I'm not going to lie, guys, if you're trading this one, you are kind of chasing. So just keep that in mind, unless you want to just invest in it. and try to go for it for the next like 2-3 years type of thing. Not a bad company. Moving on to Duolingo right now. Duolingo up 13%. So we were talking about the fact that we added some shares in Duolingo. This is my new share position in Duolingo. Some in the trading account, some in my tax advantaged account as well. Just looking for some possible upside. Looking very good, guys. Looking very good on Duolingo, but this earnings price action is somewhat very confusing. I thought it was an overreaction from the ChatGPT 5 news. And of course, now the bulls are looking good, but we're going to need to do a few things first. They need to set a new daily uptrend. We're doing good progress in terms of claiming back the 200-day EMA, claiming back this support range as well, 370 down to about 330. So nice little breakout retest. They give you the retest, maybe an opportunity for some further swing trade longs. But this one as well, right now, we covered it after earnings, right? Not that bad. Like when we bought it at 320, it was not that bad. Now at 370, arguably, you know, it's what, like 15% higher. It's a bit tough. The valuation right now is also not the cheapest, even though they are generating good revenue, good EPS. The sweet spot, guys, is really down here. Now, it's not that much more expensive, but there can be some nice opportunities for some possible longs coming out of this one, even if you have a longer duration time horizon. It's just the price action because of this earnings is very volatile, is very choppy. It's tough to derive short-term control metrics, but the bulls are not looking bad, right? They just need to give us a brand new trend, and then perhaps it'll be a bit more obvious in terms of these being your actual lows and trying to go for maybe a new weekly leg of expansion, but it's going to be slow. Talking about some of the solar names, of course, because of the new tax legislation that does possibly favor them. I don't mind FSLR, but we are coming into the top end of resistance right here. You're a bit late for this trade, I'm not going to lie. What you would need to see is kind of like a breakout. Give me a breakout of this location. It's a big resistance, right? Previous support, big resistance. Give me a breakout, right? Get everybody in, FOMO, then give me a bit of a retrace, and maybe we can talk about playing it. But solar is just not my favorite industry right now. Moving on to Celsius Holdings as well. You're a bit late to chase this one, guys. I'm not going to lie, you are going to be a bit late. But if we do get a pullback here into possibly the 52 area, will be a very nice breakout weekly retest trade, and maybe for the back test and further longs. But right now, it's tough to chase, right? What are you doing? Just buying up here. What are you doing? Buying into 80 RSI. I mean, like I always say on the channel, guys, this type of trading can work. You can buy the highs and it can work out. But is it something that you can replicate over time and have very good success? Or are you just setting yourself up to be trapped sometimes on some of these moves into consolidation? I would rather wait for the consolidation. If I don't get it and it's off to the races, well, congratulations. But I've never done poorly just waiting for back tests. There's so many stocks to trade in the market and they always do pull back. It's just like SMR, right? What are we doing here? Buying these highs? I mean, you just got to wait for the back test, whether on the weekly and stuff like that. You get better entries sometimes. And this one is monthly consolidation as well. So keep that in mind, right? If you don't want to end up trapped on some of these trades, getting peak FOMO at the top end of some of these moves, even if you get, even if you can run another 10%, right? What's the risk? You always got to ask yourself, what's the risk? If the risk doesn't line up with the reward, it's just not a good trade. Moving on to Oscar Health right now. Oscar Health, see, this is one with some good risk to reward. What do I mean? Well, the upside reward is like $20, $22, right? And we're just lifting off. So you might think you're a little bit late. I was talking about this one. There was a nice retest location, beautiful entry. This is where we opened our call options on this position. The risk level was very clearly defined. So you had a nice risk level down here below these weekly lows into massive support. And you're looking for weekly expansion. Now, it's not going to do this, but maybe it can just slowly make some momentum back in here. Anyways, the risk reward profile on this one is much more clearly established than buying CLH here, is it not? So that's my thoughts on Oscar Health. Looking very good, 6.5% move. You're not too late, but you are starting to get a little bit late for some possible call options. I went with the January 2027 $20 call options, just as a small lottery swing trade overall. But so far, the trade is moving well in our direction. Elf Beauty looking very strong right now. Weekly bears have gotten engulfed right now. So it was a weekly downtrend, back testing level I was telling you guys about. Previous support, previous support, previous support. Again, and now we're just looking to make our movement into the resistance highs here, 139 to 126. I mean, at the end of the day, guys, right? When in doubt, zoom out, right? Monthly downtrend, nice monthly 78, 80% retracement right there. Got the monthly higher lows. And if they close the month of August somehow like this, you would not be surprised if Elf Beauty has a little bit more left in the tank. Overall, go, guys, you know, at the 123 range, I mean, the valuation is not that bad. I was saying it was a great area to add here. It's not terrible, but you need to have a 3 to 5 year time horizon on the expansion of Elf Beauty. At 120, you're looking at roughly, let's just call it a 30 forward price to earnings and what? Maybe like a 1.7 peg. So still not bad numbers. Price to sales is still pretty cheap. And I still do think Elf Beauty in the next 3-5 years, if they keep executing properly, I do seriously believe that they can recapture the $200 level. It may not be immediately, but if they keep executing and keep growing market share and keep growing revenue, especially with the acquisition of Rode, it could be a fairly decent bet overall. That's just a few of the names that I wanted to cover. I mean, Tempest AI, same concept, guys. If you're buying here, you're buying late. I'm not saying it's not going to work out, but I mean, I guess everything with the right time horizon, right? I mean, if you get stuck here, you buy here, and then it comes down, you're going to feel like a community member. What usually happens is people buy here for a short-term swing trade, and then when it doesn't work out, well, then you guys start telling yourselves, well, I'll just hold it for, 6, 12 months, 18 months, and go for the fundamental aspect of the company. Don't do that. You're just cheating yourself, right? You're buying it for a swing trade. It needs to be a swing trade with defined levels. If we're looking for a back test, the likely area for a back test would be the breakout of this zone right there. Maybe a back test location, talking about the lower 70s. If you want to play short puts on it to acquire some shares that way, you can definitely do it. I mean, it's a bit wider than that, right? It's this whole level right here. All these candles right there, yeah? So if we're looking for the back test, that would be the likely back test area. But as of right now, it is just gone. I mean, there's a lot of other trades on this list, of course, guys, but we can only talk about so many. That's the ones that I had for you today. Hopefully you enjoyed, and that's it for today's video. Actually, sorry, no, it's not it. I need to show you a few trades for my portfolio, right? I did a very big update on the Saturday video, which is the Friday recap, but I filmed it on Saturday. I went through each of these positions individually. I won't be doing that today, but the only trades that I took today, guys, to start off the week, because I'm currently waiting to be called away on Amazon, on Chewy, possibly on Fiserv as well. It's going to free up a lot of buying power. So since I don't have that much buying power today, guys, I really didn't take that many trades. I mean, there were a few trades available from the top 5 options list. I mean, CoreWeave for some short puts, possibly HIMS for some short puts. And then I took another one that I was telling you guys yesterday about in the top 5 options, the bonus area of that top 5 options list. I'll show you some of these trades real quick. So we took some of them very early morning. We took New Holdings. That was on the top 5 yesterday. 12.50 strike, like I was talking about. I got roughly 9 cents. Some other people in my group got 10, 11 cents. So just depending on what you got filled at. 9 cents. You know what's funny? The automatic take profit hit on this one midway through the day. 2 cents. So pretty good, depending on how many contracts people had. That's a very good rate of return, right? You just made 0.5% in one single day. Very strong. I closed my Walmart contract at a loss. You might remember, guys, that I opened this Walmart short put last week after the Amazon news. I was expecting Walmart to kind of base out earlier and get a little bit of a bounce going into earnings. It did not happen. I wanted to give it one more day, right, into Monday session because Walmart has earnings, guys, on the Thursday session. I had the $97 strike. That's about 3% away from current market, which is the expected move for earnings. So what I did today is I wound it down for a tiny loss because I don't really want to hold a 97 strike into earnings. I'll maybe play it on Thursday before earnings with more distance, but I tried to go for a quick recapture here trade. It didn't really play out, and as a result, the contract was slightly underwater. How much did we lose? Well, we only lost $8, guys. We closed it for $1.04. We got into it for about 97 bucks. Closed it for $1.04. We lost actually $7. Big loss, right? Matter of fact, we made that back with just one contract of New Holdings today. What we did do, though, is free up some buying power. Now we're no longer beholden to sticking through this one with earnings. And what do we do with that capital? Well, we took a BITX trade, very simple trade, 52.5 strike for 31 cents right there. The trade is currently moving in our favor. It was just some early morning volatility on BITX. 52.5 is all the way down here. Where is down there? Well, quite simply, guys, that's just a back test of former previous all-time highs on Bitcoin. So I would not mind acquiring some BITX down there, which is why I swapped my Walmart, which had earnings, and I don't really want to be that close for earnings. Maybe if I can free up more capital by the end of the week, maybe I'll play Walmart with more distance, like in the lower 90s, but 97 was a little bit too close for comfort to hold that into earnings. So those are all of the trades that I really made today. Other than that, it was just kind of riding some gains. You can see we had a decent day in the markets today. That's largely because a lot of our smaller call options and even the big call options are really just continuing to be quite profitable endeavors for us. And we'll see if once again we get called away on Amazon, Chewy, and Fiserv trades by the end of this week. So that's pretty much everything I had for you guys today. Hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We do these videos every Monday through Friday after the close. And last but not least, if you have any questions, always feel free to leave them down below in the comments. I know you guys left me a ton of comments throughout the weekend. I will do my best to answer every single one of them tonight. So that's it for me, guys. Take care. See you guys soon. Have a great tomorrow, Tuesday, in the markets. And I'll see you tomorrow after the close. Peace.